Welcome back to my YouTube video, guys. This is the second video of the FDF Forex Smart Money Concept playlist and journey that we're going to dive in. So today's video is quite different based the basic understanding of candlesticks. So this is for some of you who are new in trading, intermediate, who have struggling to understand the basic understanding of the candlestick. So let's run through the intro and we'll dive deep when after the intro, and we'll run through all the disclaimer and we'll dive deep after it.
Salam alaikum.
Alaikum assalam. Salam alaikum.
So guys, welcome back. So hopefully you enjoyed the intro. Assalamu alaikum warahmatullahi wabarakatuh. That basically means peace be upon you all. Okay, so today's video is quite a bit similar and different to the basic understanding of candlesticks. Before we dive deep into other videos, for example, let's understand all those liquidity and all the POIs and everything, we have to understand the basics of candlesticks. So if we don't have the knowledge of candlesticks, it will be difficult for us to understand the market and the price action of the market. Okay, today's context are, which is based on these points: 1. What are candlesticks? 2. Why do we use candlesticks? 3. Types of forex charts. 4. Why candlesticks are better chart indicator than the rest. 5. Understanding candlesticks. 6. How to use candlestick in smart money concept, usually known as SMC. So guys, before I forget, today's video is sponsored by FDF Clothing, clothing wear that's owned and founded by me, and it was sponsored. And don't forget to hit the link, to hit in the description the link. So if you to get one of your merches, don't forget, before it will sell out, we are running a sale. So cop the merch in the link, in the description. The link is down below. Don't forget to buy your merch. So guys, let's continue. What are candlesticks? You heard someone trading candlesticks. You've seen someone using candlesticks, usually in this forex world that we're living in, the world of the forex for the young forex traders and everything. So you've seen forex candlesticks in your phone, but you have no understanding about it. How don't you have understanding of the candlesticks, but you have seen it on your phone? Now you're wondering yourself, what are candlesticks? Let's go into it. It is a type of price chart used in technical analysis that displays the high, low, open, and the closing prices of a security for a specific period. For that specific period, we mean by different types of forex. Okay, it is usually formed in a candlestick form. So this candlestick, it's not a candle like you use at your house. No, this one is quite different. It has two sticks on top and on the bottom. So we are going to show you and explain to you how to use it. Why do we use candlesticks? Simply because it's way better to understand price action, and this will give you the ability to identify prices. It's either low, high, or open or close. So the price of the candlestick will show you, and you'll have the ability to understand where it open, where it's close, where the high of the price is, and that's why we trade it. To also identify possible movement based on past performance. So it also helps us to identify possible movement and based on past performance. You understand much better the past performance and the past movement of the candlestick chart. Types of forex charts. There are a variety of forex charts. There are a lot of forex charts, but the main three forex charts are candlesticks, the one that I'm explaining today, the line chart, and the bar chart. The line chart is quite similar because it shows the price movement. The bar chart is similar to the candlestick since it almost looks the same, but it's much different to candlesticks. They differ. Okay. Why are candlesticks a better chart indicator than the rest? As we have shown you in the last slide, there are two types of them: bar chart and line chart. So why the candlestick stands out the most? Because it shows us the price action. The other two doesn't show us price action, or one of them shows us price action and the other don't. But candlesticks show us clear price action, what the price is doing. That's like what's the action of the price. That's what we mean by that. It identifies price movement and past patterns. By candlesticks use past patterns. When past patterns meaning like it form patterns, and by that you can identify those past patterns, and you can identify the movements of those past patterns. Two. Okay, why and how and what? A question answer, right? So now we are going to understand candlesticks. We are going to understand candlesticks, how it's formed, the form of the candlestick. Okay, one, candlestick has a body. The body right here, that's the body. Two, this wait, though both have bodies. This a bullish and bearish. The buy and sell. They are they are the same. They have the same. They have a body. They both have bodies. They both have wick, but their closing and the opening they differ because of the selling and buying power. This one, the buying power won. The buying and this in this bullish candle, the buying power won. In this bearish candle, the selling power won. As you can see, by the open, the price pushed up. The price pushed up. The buying power was fighting with the selling power, but it came back and closed by the selling power. And selling usually literally just won. The bearish just won, just like that. And by the bullish, it opened and it had a selling. The selling power was in was was fighting them, right? And the market had a bit of a drawdown, but the bullish had more power. I mean, the buyers had more power than the sellers, so they had to close it there. That's why they pushed a bit up, but the sellers were also fighting back, so they brought it to this price. It is um, particular price action, a price, the particular price. Yes. So on top of this, we have wicks. We call it wicks or tails or shadows. Yeah, they have different names, but you don't have to worry about the names. But we call them wicks, tails, or shadows. But yeah, that's it. As you can see, guys, they differ. The buying power has its close on top, and the selling power has its close on down below. And the opening price is on at the bottom for the buying power, and the opening price for the selling power is on top. So that's the difference. But things that are similar is that it has both bodies, both has wicks, tails, shadows, whatever how you can call them. Both have highs, have lows. Like this right here is the high, and right down here is a low. Right there is a high, and right there is a low of a candlestick. Of a candlestick, right? So now we are going to show you how to use candlesticks in smart money concept. why we use also candlestick in smart money? So it's quite the same, but they are a bit similar. So how to use candlesticks in smart money concept of why do we use it? So first of all, we identify valid break of structures and valid change of character. The 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 form of the candlestick shows us a valid break of structure or a valid change of character. They are both the same. We are going to do videos more about break of structures and change of characters. Also, we use candlesticks to identify our order blocks and our supply and demand. That's why we use candlesticks. It's better for us to identify our supply and demand and our order blocks. As I mentioned before, with the bar chart, you won't really know where your supply and demand is, where your order blocks are, and where the resistance and support, all those things. But in the line chart, you will know where the resistance support levels are. But on the bar chart, you will have a struggle to identify your actions, your prices, and all those movements. We also use the wick to identify our liquidity. As a smart money traders, we use the wick as a liquidity, a grab of liquidity, or oh, that's all. Yeah, look, we grab of liquidity. So guys, we are going to dive in the chart and show you more of what we've talked about, and make you more understand, to make it more for you to understand much better as I'm explaining now. Okay, chart. So this is the chart. Okay, first of all, go and identify our candlesticks. So guys, the chart is not online right now because the chart is closed. The market is closed on Sunday, and the market is closed for now. So let's get to and show you guys. Yes, let's use right there, guys. We use weeks as to identify our liquidity points and to see if this liquidity is being taken or not. So for example, this here, this high of this high of the candlestick and this high of this candlestick means this candlestick took the liquidity of this candlestick. Understand? Liquidity basically means money, where people are putting their stop losses. So I'm going to make a video of how to identify liquidity, and but now we're only going to show you why we made we use weeks as to identify liquidity. So as this week, that means we grab our liquidity. The market has grabbed liquidity. What we meant by selling and buying power, the market has over there. Hold on. And the market will close down here. So when the market opens, the market will close just right. The sellers had power. So guys, that's what we meant by the candlesticks, and that's how we use candlesticks. We use also by our supply and demand, but basically other block. Yeah, so why we share and like and comment down below what video you want next, and don't forget to share with your friends and tell them more about our channel, as we are growing slow and day by day. Thank you guys for watching. I love you all. Goodbye. Assalamu alaikum warahmatullahi wabarakatuh. May God bless you all and have a wonderful Sunday.
Salam alaikum.